There's a way to scalp that nobody is talking about, but today you're going to learn that way, and I'm going to dive into it by sharing my screen. So let's get started. The example I'm going to show you is with Apple. Apple on the daily, if you look at here on the daily, we're breaking out of this 162.50 area. If we go to the 4 hour, you'll see that we're breaking out of this zone. Now we zoom out further, we have some other resistance overhead, which I've already drew out at 164.30. We're going to go ahead and zoom back in here though, and you'll see that if we go to the 15 minute, we actually had a little resistance area in the pre-market and after hours and the prior day that I wanted to pay attention to. Now, whenever I saw that it was breaking out above it during the pre-market, I then established that this is no longer as important to me because it is after hours pre-market, and the main levels of 162.14, which is the breakout level. If we go ahead and zoom out in the 4 hour, you'll see here 162.14 is the main level. I'm going to get to what no one is talking about, but I need to show you what I see first in this potential trade and then show you how to execute a scalp in a way that no one is ever sharing. No one's talking about this. And that is this. We know it's a breakout trade. We know 62.14 is important. We then need to find out where we're going to stop out if we're wrong. And I plotted out 161.84 is the area that if it breaks below this area, I am wrong. So if we see the stock break out and then break here, it doesn't look good to me. But if we see it break out, break here, consolidate, and go up, I think it's still healthy. That's something you need to think about when you're going to be plotting out a trade. Where are you wrong? Now, once we establish where we're wrong, if we're going to go long this trade, we want to then find out what's our risk reward. I usually like to use a prior level, the prior highs. I don't like to assume that level will break. And I want a 3-to-1. So if you look here, 3-to-1 would be right about here, 162.06. And the plan would be, if we zoom in at the open, right before the open, you want to put your order at 162.06, and then your stop slightly below that level. In this case, 161.81. So just slightly below. Now here's what no one is talking about. We know that's our plan, right? And obviously in hindsight now, it did work. I missed this trade because I was creating content and literally thought we had a couple more minutes before the open, didn't put my order in, and it opened up and went without me, so I missed the trade. Here's what you do though. So now that we know we want to get in this 162 zone, as we mentioned earlier, here's what I'm going to do. And I'm going to use just one share in this example because I do not want to get executed while I'm trying to make a video. So let's just say we have an order at 162.07, okay, right where we want to get in. You can see here 162.07. I immediately, and this is using Dash Trader through Cobra Trading, my broker, which is the best broker in the world, especially if you're a short seller. I use them for longing and short selling. They give you the best discount if you go through me. They give you 33% off and a free month of software, so you'll be able to try this out for free. So check this out. You right click it and you'll see Edit Trigger Order. I go ahead and click Edit Trigger Order and this window pops up. So here's what's great. As soon as this order pops up, I like to put position. That just means, in this case, one share. When it's executed, it'll immediately make a new order with that position, one share. I then want to do a stop range order. Here is where it becomes amazing. A stop range order means on the low end, it will stop me out for a loss. On the high end, it will stop me out for a profit. This is what you want to do. So in this case, if this order gets executed, I know I want to be stopped out below this level, 161.84. So what we'll do is 161.81. I want to give it some room. And I know I want to take profit in this 162.80. So we'll do 75. Send. And once you do that, it'll give you this LTN. At this moment, I know if this gets executed at 160.07, it will immediately set two orders. An order right here and an order right here. So now I can walk away, enjoy my day, go make breakfast, spend time with my family, and come back, and it will be executed. It will take profits or take a loss. This is so important because now you're not sitting there with anxiety. This is going to protect you from so many human errors. If you're a trader who takes profits too soon, it's probably because you're sitting there nervous, anxiety. But But if you could walk away, let your plan play out, because how many times do you come back and it works after the fact and you're irritated? Use this strategy. If you're someone who actually takes your loss before you actually should, meaning it hasn't hit your stop, but you're taking a loss and it never would have hit your stop and it goes without you, you need to do this. If you're someone who takes new profits all along the way and you never really get your 3-to-1 or 2-to-1, whatever your goal is, you need to use this. If you want to have a life and be in and out in the trade in the first 10 minutes, 30 minutes, and the whole first day, you need to use this, because this will help you be disciplined. It will help you execute well, and it will help you track data that's accurate without the human error of emotions. And then you can go back to that data and see what works best in the long run. There's so many applications that this can be very, very helpful. And I don't know why no one is talking about this. We're talking about it here. Make sure you subscribe, and we're going to bring you more content like this.